Well, some believe that there will not be a downturn this year because of the US President Joe Biden's $1.9 trillion in fiscal stimulus. Some experts also believe that long-term unemployment is approaching a record. If you belong to the latter group, you definitely want to invest in some recession-proof dividend stocks. So, we made this video to make your life a little bit easier and help you to decide on your new recession-proof dividend portfolio. What's up, guys? Welcome back to Glory Investing Show. In our today's video, I'm going to tell you about the top 6 recession-proof dividend stocks you should own in 2021. However, before we go any further, make sure you subscribe to Glory Investing Show and don't forget to hit that bell icon so you never miss any updates. Oh yeah, and just to let you guys know, if you would like to buy some awesome dividend investor merch, check out www.incomeaddict.shop. There's a ton of different things you can purchase. You can use the code ADDICT at the checkout if you want to receive a discount. Now, without further ado, let's get into this. First of all, we have the Procter & Gamble Company, which is basically an American multinational consumer goods corporation. It is headquartered in Cincinnati in Ohio and has been working since 1837. The company specializes in a wide range of personal health and personal care and hygiene products, which are organized into a number of segments such as grooming, beauty, healthcare, baby, feminine and family care, and fabric and home care. The revenue of this company was $70.95 billion in 2020, and its operating income during that year was $16.39 billion. At the moment of making this video, the price of PG shares was $139.10, and the dividend rate is 2.49% each year. They pay their dividends quarterly, and they have an amazing dividend growth of 65 years. That makes them one of Dividend King stocks. With such a strong branding and presence on market, a lot of households cannot imagine their life without Procter & Gamble. This dividend stock survived many recessions, so it's definitely our number one for today.
Stocks only go up.
We all know that PepsiCo Incorporated is a multinational food, snack, and beverage corporation. It is headquartered in Harrison, New York, and its business encompasses all aspects of the food and beverage market. The company oversees the manufacturing, distribution, and marketing of its products. PepsiCo's push beyond drinks has helped this company top its rival sales. Well, reports suggest that PepsiCo stock is outperforming as well. According to a report published by Investors.com on July 27th of this year, while Pepsi is not known for strong earnings growth or stock price performance, it stands out for its steady income stream. The food and drinks giant is a member of the S&P 500 Dividend Aristocrats, companies that have increased their dividend payout for 24 or more consecutive years. The report also states that the company announced a 5% increase in its quarterly dividend on July 15th of this year. The dividend income was raised to $1.075 per share each quarter. This means you can earn an annual dividend of $4.30 per share. The report also said on July 12th, the snack foods giant reported second quarter earnings and sales that beat Wall Street targets. Earnings rose 30% to $1.72 a share on revenue of $19.2 billion, a 21% increase. At the moment of making this video, the price of Pepsi shares was $156.30. This giant has 49 years of dividend growth, so you can pop your favorite drink and get ready for next stock on the list.
Another one.
This is an American multinational personal care corporation that produces mostly paper-based consumer products. The company has been manufacturing sanitary paper products and surgical as well as medical instruments for nearly 149 years. Now, according to a report published by The Motley Fool on February 19th of this year, with infection rates still high, many businesses have now expanded their hygiene practices amid a sharp increase in awareness of the importance of cleanliness. Kimberly is a direct beneficiary of this trend. At the moment of making this video, the price of KMB shares was $135, and the annual dividend rate is 3.38%. Analysts suggest that people will continue their deep cleaning rituals they undertook last year, which means that Kimberly-Clark Corporation will continue to grow. The company increased its dividend by 7 cents in January of this year, which makes it 10 straight years of increasing its dividend payout. Moreover, this company also has 3-year dividend growth of 10.42%. And a report published by Entrepreneur.com on April 22nd of this year states, analysts widely view Kimberly-Clark as being fully valued at its current price. However, the company finds itself in a sweet spot where demand on the commercial and professional side should kick in even if consumer demand declines. That should help mitigate some of the added costs. Plus, you're investing in a company that provides a strong, reliable dividend. At the moment of making this video, the Coca-Cola stock price was $56.75 and the dividend rate is 2.94% each year. Coca-Cola has been one of the most successful companies and it has paid dividends for more than 100 years. This company delivered its 59th consecutive annual payout hike in 2021. According to a report published by the Motley Fool on May 26th of this year, with more than 50 straight years of increases behind it, Coca-Cola is a dividend king, a rare designation. That track record can give added confidence to income investors because maintaining such a streak requires long-term balance sheet stability. For this reason, some count Coca-Cola among the safest dividend stocks in the world. You might be surprised to know that this company now owns nearly 200 brands, such as Topo Chico Mineral Water, Cost's Coffee, Honest Tea, and Minute Maid Orange Juice. The company generated nearly $8.7 billion in free cash flow last year. Also, Coca-Cola is one of the favorite stocks of Warren Buffett, who started purchasing Coca-Cola stocks in 1988. In simple words, Coca-Cola is one of those companies that can perform well even during tough times, so it is always a better idea to invest in such companies. And at the same time, you can earn dividend income by investing in Coca-Cola shares. Can you imagine today's world without Coca-Cola drinks? Next on our list is Johnson & Johnson, which is an American multinational corporation that develops medical devices, pharmaceuticals, and consumer packaged goods. It is worth mentioning that this company is ranked number 36 on the Fortune 500 list of the largest US corporations by total revenue in 2021. It is also one of the most valuable companies in the world, as well as one of the only two American companies that have a prime credit rating of AAA. Although this coronavirus vaccine maker has underperformed the market over the past year, this company has already received orders for 500 billion doses this year. And according to a report published by the Motley Fool on March 10th of this year, at a price tag of $10 per dose, that means the company could have up to $10 billion in potential revenue over the next 2 years. Johnson & Johnson is indeed an excellent stock to purchase purely for its core business growth. The consumer health, medical devices, and pharmaceutical segments of the company brought a combined revenue of $82.6 billion in 2020. At the moment of making this video, the share price was $172.18 and the annual dividend rate is 2.47% per share, with amazing dividend growth of 58 years. Lastly, we have Altria Group, which is one of the largest producers and marketers of tobacco, cigarettes, and related products in the world. This company operates worldwide and is the parent company of Philip Morris USA, the producer of Marlboro cigarettes. Analysts expect that the earnings of this company will grow 5.3% this year, and the report published by Forbes on July 22nd of this year states that the MO stock is up almost 13% during the last 6 months. Forbes report states, according to the Trefis machine learning engine, which identifies trends in the company's stock price data for the last 10 years, returns for MO stock average more than 3% in the next 6-month period after experiencing a 13% rise over the previous 6-month period. Also, there is a 58% probability of the stock giving positive returns over the next 6 months. At the moment of making this video, the price of MO stock was $47.62 and the annual dividend rate per share is 7.23%, a dividend growth history of 17 years. According to Yahoo Finance's recommendation rating, this stock is a definite buy. So with this smoky last stock, we got to the end of our today's video. I hope you enjoyed it, and if you did, make sure to smash that like button because it helps us with the YouTube algorithm. And lastly, if you have not already subscribed to Glory Investing Show, subscribe to it and press that bell button so you will be notified each time we upload an interesting video on our channel. And while you're here, click to watch one of these 2 videos that are appearing on your screen. We'll see you there. Take care and stay tuned.